Well, hello, traders. This is Rob Reinhold, and we're going to be talking about how to trade the Australian dollar. Now, the Aussie dollar is one of my favorite currencies to trade. It is very volatile, it moves. So let's just jump into what are the best ways to trade it. And let's first start off with the Australia economy because you really have to understand what the Aussie dollar is all about because there are some very strong correlations that happen in the Aussie dollar. Australia is a highly developed country. It produces a lot of things. It is very heavily based on commodities. And it actually sells much of their basic materials to Asia. And so Asia itself, and I'm just talking about China, Japan, Korea, it accounts for 64% of all their exports. They have a very big mining industry. That's the largest industry in Australia. And the economy in Australia is actually one of the highest per capita GDP producing countries, which means they have the highest GDP per person, very highly productive. As far as imports go, their main imports are automobiles, gas and oil, and gold. Now, ironically, gold is one of the top three. They are one of the top producing countries of gold in the entire world. As far as their top exports go, you can see iron ore is their number one export, $80 billion. Now, just take a look at the difference. The top import of theirs, $13 billion. The top export, $80 billion. So right away, you understand that Australia is an export-driven economy. They export way more than they import. Second one is coal. And third one is gold. So they export way more gold than they import. And you can see the top three are all commodities. And here is the breakdown of their exports per country. And the first thing you see is that big, huge block in the top left, China. That is just a huge block. 40% of their exports go to China. So Chinese economic growth is extremely important to the economy of Australia. And then you see Japan, South Korea, India. Right there is 65%. 65% of all their exports go to those four countries. Now, Australia is not a huge country. It actually is home to about 26 million people. And you can see that it is an export-driven economy, meaning that they have way more exports than they do exports. Historically speaking, Australia has had one of the lowest debt-to-GDP ratios in the world. It used to be under 10% for like 30 or 40 years. Because of a few things, COVID and some other things, that has actually risen along with the rest of the world up to 63%. Now look, whenever we talk to debt-to-GDP ratios, people always freak out, saying, oh, that's so much debt. The way that it works is as long as you're not the worst country in the world, people are going to trust your economy. This is actually quite low in the developed world. United States is somewhere around 90%. Europe's around 110%. Japan is like around 270%. So this is quite low for a developed nation at this point of the time. For a country of 26 million people, that is actually quite impressive. It is very highly traded. And as I said, it's one of the most fun currencies to trade out there. There's a $71 billion money supply, and that accounts for around 7% of global currency daily volume. Again, 7% of global currency daily volume. Australia is nowhere near 7% of world GDP. It tells you that Aussie dollars are in demand. People are actively looking to buy and sell Aussie dollars. Australia was the first country to produce plastic banknotes. This was revolutionary, and they were able to do a lot of security features in the polymer banknotes that really made it a very difficult currency to counterfeit. In fact, lots of other Asian countries came to Australia and asked them, will you produce our currencies? We'll talk about that here in just a little bit. And their upgraded polymer banknotes of today, they actually contain braille dots and lots of other good security features. So as far as Australian dollars go, the actual hard physical currency, it's a very, very interesting currency, very colorful. All of the denominations are different sizes. I think it's one of the most beautiful currencies in the world. Let's talk about Australia's central bank. Their central bank is the Reserve Bank of Australia, or the RBA. If you ever hear us say RBA, that's what we're talking about, the Reserve Bank of Australia. Now, like most central banks, it started out with a private for-profit bank. The Commonwealth Bank, back in the 1800s and early 1900s, their duties were also to manage the currency and to act as a central bank. And after a couple of booms and bust cycles where the Commonwealth Bank was severely compromised, they actually took the duties away from the Commonwealth Bank and created the RBA back in 1960. The RBA has 9 members. 3 of them are government members, 6 are external members. And again, these members are from around the community. Now, the rule is they cannot be part of a bank. They cannot be like members that sit on the board of a bank. They have to be fairly independent. The RBA has a triple mandate. Most central banks have either a single or a dual mandate. They have a triple mandate. The first one is price stability, and they're very clear on price stability. They want to stay between 2 to 3% inflation. Second mandate is full employment. Very clear. They want to be between 5 and 6% unemployment rate. And then the third one is very general and very ambiguous. They are there to enhance the economic prosperity of the people of Australia. What does that mean? No one really knows. They were so clear on the first 2, and then the third one they just throw it out to really give them the ability to maybe act outside of those very rigid guidelines. But theoretically speaking, they have a triple mandate. Really, it's a dual mandate with a little cherry on top that says, okay, in case you don't get the numbers you want, you can do something a little bit different. Now, the RBA had a big scandal. Back in 2007, they had something called the Securrency scandal. Now, I talked about the polymer banknotes and how they were revolutionary. And a lot of the countries in Asia came to the RBA and said, hey, we want you to print our currency for us. And what happened is the RBA went out and bribed other countries' leaders so they would land the contracts. Again, this is just bribery, just flat out bribery. And in 2011, it was revealed that the RBA lied to Parliament. They flat out lied, they covered it up. And then in 2014, it actually came out that there was a government court order prohibiting any publication, any newspaper, magazine, or anything, prohibiting them from revealing, implying, or suggesting corruption. Now, this is really big deal in Australia because Australia is a very free country and they take their freedom very seriously, the freedom of the press. And this was a literal court order gagging the press to revealing the Securrency scandal of the RBA. Now, look, this was a big scandal at the time. It's taken a couple of years, but for the most part, this is back in history, and the RBA is a very trusted central bank. Let's talk about the economic reports that you're going to get out of Australia. We get quarterly GDP reports. We get monthly employment reports. Every month, we're going to get a producer and consumer price index. We'll get retail sales. Now, look, this is all pretty standard. This is the same around most of the countries in the world. Here's the one that's a little bit different. China manufacturing. So remember, we talked about how big of a deal that exporting is for the Australian economy and how big China is as part of that export. The manufacturing that happens in China, it takes a lot of natural resources. If Chinese manufacturing is doing very well, you can bet that they're buying lots of resources from Australia, which will absolutely help the Australian economy. If Chinese manufacturing is down and a little bit suppressed, they're not going to be buying as much from the Australian economy, which is going to really matter. So whenever we talk about trading the Aussie dollar, we really have to think about China. A huge component of what the Aussie dollar does is based on China. So let's talk about some of these correlations. Correlations are just so important in the world of currencies. First correlation I want to talk about is the Aussie dollar has a 60 to 90% positive correlation with the S&P 500. At first, you might think to yourself, why in the world would the Aussie dollar be correlated to the US stock market? Well, look, it's really more about risk on and risk off. At Maverick, we're always talking about risk on and risk off. And when things are risk on, people want to take risk. So what do when they want to take risks? They buy stocks and sell bonds. Well, they also wanted to look at faster growing currencies. The Australian economy typically grows faster than the United States economy when there's a boom cycle. And so when there is an up market in the S&P, you're typically going to see a very strong economy in Australia, which means that the Aussie dollar is going to be in high demand. Typically, the RBA has interest rates much higher than the US central bank. It makes it a very attractive currency to buy. So let's take a look at that correlation. First, we're going to look at our Australian dollar proprietary basket. Now, what this is whenever you look at a currency, you have to look at a currency against another currency. But the problem is there's nothing that tells you how it does against all currency. We've built these proprietary baskets where we equally weight them against the 7 other currencies we look at. So this is really taking a look at the Aussie dollar's value against 7 other currencies. And what we want to do is we want to say, hey, let's compare it to the S&P 500. So what I want to do here is I want to throw in the S&P 500 over this chart. And I want you to see how highly correlated it is. So our candles are the Aussie dollar, and this orange line is the S&P 500. As you can see here, we talked about it being 60 to 90% correlated. At this point, this looks very closer to 90% correlated. You can see that it follows it very closely. Now look, there are going to be some periods of time where it is not as closely tracked. Sometimes up back here in June, we see there is actually a little bit of a negative correlation. But as we go back through time, you can see that a lot of the time, the Aussie dollar is highly correlated to the S&P 500. It's simply just a risk-on, risk-off move. So if the S&P 500 is going lower, it's a pretty good bet that the Aussie dollar is also going to be lower. Look, it doesn't happen all the time, but with these high correlations, we can pretty much make a good case. If the S&P is running higher and making new highs, hey, you know what? That's a great time to be long Aussie dollar. The next very strong correlation with the Aussie dollar is with iron ore. Now, iron ore is their largest export, and China is their largest exporter. Let's take a look at the Aussie dollar against the price of iron ore and see its correlation. Here we have our Aussie dollar basket again. Now I'm going to put in the iron ore, and I'm going to be just choosing the continuous futures contract. Okay. So the candlesticks are the Aussie dollar, and this orange line is the iron ore contract. Now you can see it's not as highly correlated as the S&P was. The S&P was very highly correlated to the Aussie dollar, but you can see here the price of iron ore fell, and we see the price of the Aussie dollar fall. We see the price of iron ore rise, we see the Aussie dollar rise. If we go back into history, you can see that at certain times there's a bigger correlation than other times. But you can see that there is a fairly high correlation. Like we said, it's about 70% of a correlation between the price of iron ore and the price of the Aussie dollar. Now look, 70% means that 30% of the time it is not correlated. Here's one of those times from January 2019, the price of iron ore went substantially higher. However, the price of the Aussie dollar went substantially lower. That is an aberration. That typically isn't what happens when we have these correlations. But you can see that over time, there's more positive correlation than negative correlation. Again, iron ore is another measure of economic growth. When people are growing, they're building a lot of stuff, iron is a component, it would make sense. It's all tied together into this risk-on and risk-off movement. And the last correlation, we've really talked about this, the Chinese economy. The Chinese economy is a really big deal with the Aussie dollar. Let's take a look at the Aussie dollar against the Hang Seng Index, which is the Hong Kong Stock Index. Here is our Aussie basket again, and I'm going to compare it with the Hang Seng. And we're going to add this. Same thing. We're going to see that the Aussie dollar is the candles, the Hang Seng is the orange line, and you can see some positive correlations. You can see the Hang Seng Index started to drop, the Aussie dollar started to drop at the same time. Back here, we saw the Hang Seng start to rise, and we saw the Aussie dollar rise with it. So it really tracks well with Chinese growth. That's why whenever we're trading the Aussie dollar, we always are watching for news out of China. If we're looking to trade the Aussie dollar on Tuesday, and we see that China PMI is on Tuesday as well, that's telling us, hey, you know what, we need to be cautious. That whatever happens in that news report is going to have a dramatic effect on the Aussie dollar. So when you're trading the Aussie dollar, remember you are trading China. You are trading China's economic growth, and that needs to be part of your consideration whenever you're looking to trade it. When you're looking to trade the Aussie dollar, the most traded pairs are Aussie dollar. This is the largest one. This is going to have the tightest spreads. This is the one with the most activity. Now remember, the US dollar is negatively correlated with the S&P 500. So just think about how great that is. We have the Aussie dollar that's positively correlated with the S&P 500, the US dollar that's negatively correlated. And since we're talking about it, let's talk about Aussie yen. The yen is also negatively correlated with the S&P 500. What this means is these two pairs are going to be highly correlated to stock prices. So understand that when you're trading Aussie dollar and Aussie Kiwi, you're really trading the S&P 500. You have to be mindful of that. So if we are in a bear market in the S&P 500, you likely want to be short these two currency crosses because it's going to track very closely with what equities do. Aussie dollar, Aussie yen, you are simply trading equities at this point. When you get into things like Euro Aussie, now we get a little bit more pure currency cross. This is a highly liquid pair, and it is just a fantastic trading vehicle. And then Aussie Kiwi. Aussie Kiwi, they are typically very highly correlated. There's about an 80% positive correlation with Aussie and Kiwi. So we don't trade this pair often, but every so often they become negatively correlated and it becomes a really great trade. So that's always what we're looking for is when do Aussie and Kiwi become negatively correlated or uncorrelated? And then we look to trade that pair during those periods of time. So to wrap up, how do you trade the Aussie? Well, look, you want to be long the Aussie when there's a risk-on move, when there's rising stock prices, increasing economic growth, when people are in a good mood financially. The Aussie dollar typically outperforms all the other currencies. We also want to be long the Aussie when we see rising iron ore and gold prices, especially out of the Asian countries and especially out of China. When Chinese economic growth is going strong and there's lots of building, the Aussie dollar is a fantastic place to be long. And last, whenever the RBA's interest rates are higher than other central banks. Back in 2007, there became a very big trade, and this trade was absolutely enormous on both sides. It was called the carry trade. Now, the RBA's interest rates were somewhere around 10 or 11%, and Japan's interest rates were at 0.5%. So what that means is whenever you buy a currency cross, you get the interest rate differential, which means you get paid the currency you're long in interest, which was the Aussie, which was around 10%, and then you had to pay the interest to the currency you were short, which was the yen, which was 0.5%. People were making about 8 or 9% a year just holding Aussie yen, and that's called the carry trade. And it became a very popular trade. Lots of people plowed into it because where else can you get 8.5% interest on any sort of asset? The Aussie yen went sky high. And then when the bubble burst in 2008, this thing came unraveling. And all of a sudden, everyone was selling Aussie. We went from 110 on Aussie yen all the way down to 0.5. So that's over a 50% loss on that move. So interest rates are a very big deal, especially when they get a big wide range between countries. And typically, the RBA is going to be one of the higher interest rates in the world during economic growth. When to be short Aussie? Well, like we said earlier, when you're trading the Aussie, you're trading equities. So falling S&P price, risk-off moves, you want to be short Aussie and you want to be long things like dollar, yen, and Swiss franc. Whenever we see falling demand for commodities, especially from China, that's when you want to do it. And whenever Chinese economic growth is slowing or expected to slow, this is a big drag on the Australian dollar. Great time to be short on the Aussie. And then anytime there's any sort of global economic or geopolitical stress and worry, people don't want to be in the Aussie. They want to be in safe currencies like the dollar. And so people rush into dollars because they consider dollars to be the safest place to be, and they're running out of places like the Aussie. So anytime that there's economic or geopolitical stress or there's something going on in the world that's causing fear, you do not want to be in the Aussie. So hopefully that helped you learn how to trade the Aussie. As always, look at your charts, build your trades, follow your system. But thanks for joining me for the Aussie dollar. Goodbye, everybody.